Africa is changing the rules of the global economic game. The creation of the African Continental Free Trade Area, AFCFTA, in recent years marks a historic turning point in the continent's economic strategy. By unifying its markets and strengthening its internal trade, Africa is asserting its ambition to have a greater impact on the global economy. This initiative paves the way for a new dynamic of growth, integration, and economic sovereignty. The agreement provides for the gradual elimination of tariffs on 90% of goods, the liberalization of trade in services, and cooperation in areas such as investment, intellectual property, competition, and e-commerce. Entering into force in 2019, largest free trade area, world's, with 54 signatory states out of the 55 members of the African Union. For decades, Africa has been described as a continent rich in resources but poor in economic influence. This era is drawing to a close, with 1.4 billion inhabitants, a rapidly expanding domestic market, and a combined GDP of $3.4 trillion in 2026. The continent is gradually establishing itself as one of the new centers of gravity of the global economy. Its growth, estimated at between 4.1% and 4.3%, now exceeds the global average. But the real turning point lies not only in the figures. It lies beneath the African soil. The continent holds nearly 30% of the world's reserves of critical minerals: cobalt, lithium, copper, and rare earth elements essential for the energy transition, electric batteries, and digital technologies. In other words, the planet's industrial future depends in part on Africa. In this new context, the major powers, the United States, Europe, China, and Russia, no longer view Africa as an economic periphery. They now consider it an indispensable strategic partner. At the same time, a quiet transformation is underway. Thanks to the African Continental Free Trade Area, the continent is building the world's largest integrated market in terms of consumer numbers. The objective is clear: increase trade among Africans, process resources locally, and finally capture the value that has thus far eluded the continent. At the heart of this transformation lies a crucial question: monetary sovereignty. Between banking system reforms, the mobile money revolution, and digital currency projects, several African states are now seeking to reduce their dependence on major international currencies. Stabilization funds, stabs, and coins are increasingly used to bypass traditional banking channels, thus contributing to a significant reduction in transfer costs and an acceleration of international financial transactions. This could profoundly transform the monetary balance in Africa by offering a direct alternative to the traditional banking system and dominant currencies. Backed by stable assets, often the dollar or the yen, it allows for near instantaneous international payments with very low fees, thereby bypassing traditional banking infrastructure and the cumbersome processes of cross-border transfers. On a continent where a large portion of the population remains underbanked but highly connected to mobile devices, this technology can accelerate financial inclusion and boost regional trade. The economic battle of the 21st century will not be fought solely on resources or markets. It will also be fought on currency, finance, and the control of value. African monetary power must be based on a unique combination of economic, demographic, and strategic factors which, if properly structured, could transform the continent's role in the global economy. With over 1.4 billion inhabitants, above-average global economic growth, and vast natural resource potential, Africa has the necessary foundations to progressively strengthen its financial autonomy. If these dynamics are accompanied by coordinated monetary policies, robust financial institutions, and the local transformation of strategic resources, Africa could gradually consolidate greater monetary sovereignty, capable of converting its economic potential into real influence in international financial balances. The monetary and financial revolution undertaken by the BRICS of Earth countries can serve as a strategic source of inspiration for Africa in building its economic sovereignty. For Africa, this revolution opens up three major perspectives. First, an alternative to the dollar in international trade. If the BRICS digital payment platforms become interconnected, African countries could trade with these major economies using their digital currencies, without systematically relying on the dollar. This would strengthen their monetary policy. Secondly, a technological model for African currencies. The experiences conducted by the BRICS offer laboratory for African central banks considering their own digital currencies or regional payment systems. Thirdly, a new South-South financial architecture. Cooperation between Africa and the BRICS could contribute to building an alternative payment network linking emerging economies and African markets. In this perspective, certain institutions, such as the New Development Bank, the BRICS Bank, could play a role in creating independent financial infrastructures. In summary, the BRICS electronic currencies are not just a technological innovation, they are contributing to a reshaping of global monetary power. For Africa, they represent both an opportunity for financial diversification and a potential lever for strengthening its monetary sovereignty in an increasingly multipolar world. Ultimately, Africa is entering a decisive phase in its economic history. Strengthened by its strategic resources, its demographic dynamism, and the integration fostered by the African Continental Free Trade Area, it now possesses the necessary levers to reinforce its financial sovereignty. The emergence of new monetary